Hello and welcome to another update video about render. The render chart is currently correcting. It's holding still quite well, especially compared to some other cryptocurrencies. And I'm talking about the rally that occurred from the March low. Okay, that was quite substantial. The market moved up round about, we talk about 60 to 70%. I'm gonna zoom in a minute, but we're now obviously correcting, like many other cryptocurrencies. Also, render is currently correcting, but it's still holding up quite well. I have little hope, however, that it's going to hold support and that it's going to form another high. I'm talking about the microstructures here. Before we really zoom in, I wanted to talk a little bit about the bigger picture here, and I want to talk about the move down from the March high of last year. This is seen as a corrective pullback at the moment in 3 waves. We have an initial move down, which was the wave A, a move B or a wave B, and the C wave down. It is a 3-wave move to the downside, which unfolded there, or is currently still unfolding. And the market landed in standard support for such an ABC structure in wave 4. Support is between $1.53 and $3.52. We're now not even in standard Fibonacci support. We've also reached Fibonacci extension targets. This is the blue zone, because in addition to the standard Fibonacci support that we can calculate based on the length of the initial decline, so we just take that length with the Fibonacci extension tool, project it out, and we get to this. No, it's not just like that. You know, we don't just get the targets here. Well, we don't only have standard Fibonacci support, we also get these ideal targets, and with them we can identify key Fib levels, which kind of serve as additional parameters that we can watch. And ideally, there is an overlap between them, these Fibonacci extension targets in blue, and the standard Fibonacci retracement levels in orange. And there isn't really a direct overlap. I mean, the boxes overlap here, but sometimes we even have it, for example, that the 100% extension level aligns with the 38.2 retracement. We don't have that so much here, but you can see that the market in this move down already dipped into the blue target zone, and the bulls turned up around the 100% Fib extension. This is not a surprise, given that a C wave would typically reach at least that level, but very often this is an area where bulls turn up, because very often the A wave and the C wave have a similar length or the same length. Looking at the 4-hour time frame, you can see that there was a substantial reaction, but the market has avoided a decisive break above recent highs. And the rally is so far still in just 3 waves. 1, 2, 3, 4, 5. 5th wave would still be missing. It's still only a 3-wave move up. But hey, that could still happen. But I already posted it in one of the updates earlier today on Discord that I don't necessarily believe it will hold, because it starts to look a little bit like a 5-wave move down. Okay, I've got 5 waves down here in this move down from the swing high from the 26th of March. And the 5-wave move down is not a great start, really. Rather, this pullback should actually be corrective. It should be a 3-wave move. Yeah, it looks like it's going to break it. I mean, I can tell you we're tracking here potentially how a 5-wave move up would look like, but I don't have any hope. Not really. Not high hopes that this 5-wave move will actually unfold. It would mean that the bulls need to turn up before the price breaks below 330, and it's rather increasing downside momentum. So yeah, there is no evidence that the bulls turn up, and as I said, this looks a bit like a 5-wave move down as well. So yeah, between 345 and 330, the bulls would need to turn up, start the 5th wave, get to I think at least 446, then we can talk if this is really a 1-2 setup. But until then, a move down is very likely, given that this looks like a 5-wave move down, and the move down is very sharp. Again, too sharp to be really ideally an internal 4th wave pullback. So just be aware of it. I mean, support objectively is still holding, but we haven't even seen really a buy reaction from there. So from that point of view, I think it's quite unlikely it's going to hold support. So, and then, I mean, the question will be, you know, where could it get to? Where could that next move down take us? And if we zoom out a bit, you can see the next Fibonacci support levels. First of all, The last swing low will likely be tested around 251, but 232 to 217 would be the next key levels to watch then as support. Yeah, so be ready that the market could easily come down, test that level, and there might be a turnaround. So that's the update about Render. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.